Hello and welcome to San Diego Market Watch, where we bring you accurate, timely information about the real estate market in San Diego County every single week. Today is February 23rd, 2023, which means this is the last market update that we will bring you for February 23 as we head into the last month of the first quarter. So we will see what March brings. However, we have not so far had the first quarter that a lot of people were expecting. There are still lots of experts out there predicting that real estate is going to come crashing down in 2023, and I suppose anything is possible. However, at this time, we are seeing nothing but declining numbers of homes for sale. The number was relatively flat from last week, although slightly down, as it has been every single week since mid-November. You can't even see the part of the chart that shows how long inventory was stuck right around 4,500 units. We're talking about June, July, August, September, October, and most of November of last year. We were sitting right up here, and that number has just been going down every single week as the number of pending sales have increased and the number of new listings have decreased. Now, looking at pending sales and new listings from last week to this week, absolutely flat. We didn't have a jump in new listings. We didn't have a declining in pending sales. If you remember last week, we were talking about the possibility that this may continue to go down and cross below the number of new listings, indicating a drop in demand at a time when supply was increasing, which would spell potentially a change in the market. We can see that back here in December, new listings jumped up from the last week of December into early January, and pending sales were below the number of new listings at first, and then pending sales outpaced new listings all through January and February. With rates increasing slightly, we've seen a slight drop off in pending sales, although these two numbers remain steady from last week. So at this point, supply and demand are remaining about the same, and the number of closed sales has declined over the past 3 weeks, however, not dramatically. And, if you go back a few weeks, you'll see less pending sales, which is why you might see less closed sales over the past 2 or 3 weeks. So we will keep an eye on that. I would say, let's see, 1, 2, 3, we are going to see a jump in closed sales probably next week and the week after, as we look at this spike in pending sales here. We had 1, 2, 3, 4, 5 weeks of increasing pendings throughout these weeks here, which should begin to show an increase in closed sales as these pending sales turn into new homes for folks. So let's jump ahead here and take a look at interest rates. Oh my goodness. Okay, so the average 30-year fixed mortgage rate over the last week, according to Freddie Mac's primary mortgage rate survey, is 6.5%, and that is definitely up from the week before. We had several weeks of declining rates, and it started back up again as new inflationary fears and other economic forces have been pushing on rates. I believe what happened here when we saw a fairly dramatic decline in rates is that the mortgage industry is always trying to forecast a little bit. They're always trying to pre-bake in rate increases or decreases based on what they think might happen in the bond markets with inflation and all these other factors. And there may have been a bit of an overcorrection to the negative here, and I believe the same could be said about this jump up here, a bit of an over increase in the positive direction in anticipation of other economic news. I think over the next couple of weeks we will probably see mortgage rates come down just a bit. Hopefully, we'll see them settle back down closer to 6% or even below 6%. However, right now, they're a little bit ugly for buyers. But what's new? That's been happening for the past several months. So 6.5, definitely not as bad as 7.1, which we had back here. So we will keep an eye on mortgage rates, as that does have a dramatic impact on demand for resale homes and new homes too. So looking at that, moving on here, no change in the median price graph from last time, because this is a monthly number. So as we talked about last week, there had been a little bit of an uptick. I believe this was 0.3% increase in median price over the past month. And I believe next month we're going to see an even larger increase, probably in the 1.2% range, I'm going to predict. And that doesn't necessarily mean that prices are going to continue going up, just as this didn't mean that prices were going to continue going down. We definitely did establish a trend from the middle of last year to the middle of last year to November of last year. And, then things bottomed out, whatever you want to call it, flattened out. Many experts are predicting that this is just going to fall off the cliff. But as long as supply and demand are doing what they're doing now, that won't be the case. So we are just going to have to wait and see what happens with new listings, what happens with pending sales. And a lot of that has to do with what happens next with interest rates. Going back to that chart for a second, if this starts to go up, you may see more sellers rushing to the market as they fear rising interest rates are going to splash cold water on demand. But it's very, very difficult to predict what's going to happen in the real estate market. Things seemingly change overnight, but real lasting change in the market does take a while to unfold. So we will keep an eye on all of these things for you here on San Diego Market Watch. If you enjoy this content, please like, share, subscribe, and comment. We love to respond to comments, and we love new subscribers. So tell your friends to tune in every Thursday to San Diego Market Watch and subscribe. Thank you so much, and we will talk to you again very soon.